Hi, welcome to the Market Alert for Monday, the 15th of November 2021. So Wall Street reaches record high as Main Street sentiment hits 11-year lows. That's the highlights and news for Friday. Who exactly are the world central bank liquidity suppliers really working for? Well, I think anybody can answer that one. It's going to be the bankers themselves and pumping the stock market to the upside, creating asset bubbles, of which may be coming to an end, which we'll look at in just a moment. On the inflation side of things, pre-2020 prices are gone forever. Price inflation is completely out of hand. You know this, and your dog knows it too. Inflation in irrational exuberance. This is obviously quoting Greenspan back from the 1990s about the stock market. The Fed is starting to sweat. I don't think so. I think it's part of the agenda because for 13 years they've pumped money into the markets. They've been able to taper. And I think that'll be the case as well going forward again, which we'll look at in just a moment. But this hyperinflation for me is a sort of a last-ditch approach by the central banks to try and hyperinflate the way out of the debt, because for the last 13 years, the reduction of rates, etc., where rates should be an average of 5%, the bank rate is 0.1%. And it got a situation where they can't normalise anything. So, the best thing to do is to make the debt look small, and that's to allow inflation to run rampant, which they're doing. And it's only just the beginning of it. News on the tapering, as I just mentioned. Taper begins. The Fed reveals only 70 billion in bond purchases over the next month, down from 80 billion. Nothing really to sweat about. I don't think it's enough to actually create a stock market crash by any means. But you'll see there today that the 15th of the 11th, they're starting to reduce the purchasing of the bonds. So the tapering has begun. Meanwhile, in the implied volatility, still coiling down here. As you can see, that's why I haven't updated it every day or shown it. As you can see, getting into a coiling spring type thing. So we are due for a correction based upon this. I mean, it can coil for a long time, but we're down at 13.43 for Friday. 12.37 is the low, and we had a low as well of 12.54. So you've got this sort of sideways range in the implied, and we know what happens to the underlying market when it does this. So hang in there, as they say. Right, news. What have we got for today? Let's have a quick look. We just got the Empire State. That's out at 1:30, so the market's got to make its own direction. Let's have a look for the week. Tuesday, we got any Fed speakers out or central bankers this week? We've got retail sales tomorrow for the US. All US news tomorrow from 1:30. We'll look at it in more detail tomorrow. We've got CPI from the UK on Wednesday morning. That will be an interesting one as they rig the figures on this. Thursday, and we've got a couple of central bankers out. And then Friday, what have we got? Again, we've got Lagarde, the criminals, out on Friday, as Waller and Clarida also, and a Treasury currency report, but that's only tentative at the moment. So let's have a look at the markets, see where they traded on Friday. We'll start off with the Dow, and again you can see that we're still in the red here on the MDI. We traded down to 62%. The market managed to move back to the 5-bar moving average in the daily chart, but overnight prices are moving lower. So a bit of weakness there. Maybe it is the start of tapering that's creating a bit of downside pressure there, but you can see that the market trading to Friday's high, and then has made its way down towards the DP for the Dow at the moment, but just stuck in a sideways move. Got a bit of a 78% retracement going on there at the moment as it approaches the DP level. In the German DAX, we have, go to the daily chart, zoomed in here so that you can see what's going on. We've got a 122 high, a 123 high, and the market trading up to which is this one. I'll just do this. You'll see that we've got. Let me just move this over. There we go. So we've got the 123 high, which is Friday, and then overnight we've got the 122. So if we look at this a bit more closely, you can see that prices there moving to the upside of Friday, just below it at 122, and then moving to the downside there. So we filled the gap. That's all that matters there. The gap's filled, and then we've got the DP level there. You can see where the support's coming in here as well, as prices attempt to move back to the upside. Friday was really quiet. You can see that we moved higher initially to Thursday's high. Then the market traded down to the DP, where we saw demand coming into the market. We then had a retracement up to 62% to the previous day's close, and then prices just traded sideways, really quiet on Friday. And then through the mid-morning session, also trading in a range of 12 points, and then just moving lower on Friday. But again, you can see that you've got this sideways coming back and picking up at the DP level, before eventually just trading back up to the 200 MA, then back. And these are just 10-point ranges. There was only 20-point range on Friday afternoon. Market gaps higher overnight as the new week starts, which you can see they're trading up to Friday's high, or within 1 point, and now just really quiet, you can see. And there's no news today to move the market, so we'll have to wait and see. But there's some very quiet 2-minute time periods on the overnight market there. However, the silver market's been busy overnight. If I can find it, there we go. So what I've done is change the colours of the averages. I wanted to see how they were all green, and what you can do is in the averages options, you can actually have long and short, so it just shows the colour of the averages when it's obviously turns long after changing from the downside average to the upside over the specified period of time. So I've got the 5, I've got the 20 and the 50, and then I've got the 100 is still red, as is the 200, and you can see price is trading to the 200 on Friday, and this is giving the market a bit of grief. And overnight they've moved the market down sharply, which we'll look at just a moment, but we're still above the 5-bar moving average. But we really need to take out the 200 MA and this 89% in order to move higher. Let me just reset this chart and just bring this down a bit as well, so that you can see that's where we need to get above, and this 89% as well. But at the moment the market struggling with that 200 MA, and everybody knows this that trades the silver market from a technical point of view. We really do need to take out this 200 MA. In the gold market, also down, but nothing like silver, so I suspect that the gold-silver ratio, is up slightly, which you'd expect. And also, again, if you look here, you've got an 89% retracement, so the market going to find a bit of support there. So just moving up slightly there. If you've got green bars in the gold-silver ratio, it means that gold is holding stronger than silver, and then obviously vice versa. So that's why you can just, you can eyeball it. You can see that overnight move in gold is nothing like it is in silver, where it's come back more or less 78%. In the dollar, though, an interesting one. This is also sideways to lower, and yet silver is under pressure. So no surprise there. Trading down to Friday's low for the dollar. In the 30-minute chart, you can see them buying in this area here. We've got demand. We've also got an 89% retracement, and the market attempting to move to the upside. So you could see a bit more downside pressure in silver, but you can see, take advantage and just slam the price overnight, sell a few 100,000 contracts or 10,000 contracts, whatever it is they do in these derivatives markets, to create this sort of 1 bar 30-minute to the downside. You can see it in the 5-minute as well. Every 5 minutes they were hammering the price down to $25, and then you see the opportunity to buy back in at this level. But at the moment, just back above the $25 per ounce level there for silver. So that's a roundup of where we are, and like I say, the market's very quiet at the moment. Even the Dow just coming back to the DP there in the 30-minute at the moment. So it depends how the market's going to interpret the taper, which starts today. So again, we'll just have to wait and see. But they're doing it very gingerly and sort of not making too many announcements at the moment about it, starting with small amounts, because the last time they did it, when they halved it, the market just fell out of bed. So I think they learned a lesson. But it'll be interesting to see how the market reacts to this today, that's for sure, whether it worries them or not. But at the moment, you can see the Dow down nearly 100 points from the overnight high and Friday's high. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.